The rise and fall of cryptocurrency millionaires. The history of cryptocurrency millionaires is marked by turbulent downturns, dizzying heights, and rapid ascents through the market. Bitcoin, Ethereum, and other cryptocurrencies have been responsible for the unexpected accumulation of wealth over the last decade, which has resulted in the emergence of a new category of digital asset holders known as cryptocurrency billionaires. However, even though some of these people were able to amass money in a short amount of time, a significant number of them also incurred losses in the same short amount of time, highlighting the tremendous volatility and one-of-a-kind risks that are connected with digital assets. This shifting wealth and the reasons that shape the fate of Bitcoin billionaires are revealed by recent market patterns and broader economic events, which provide insights into these phenomena. In the early days of Bitcoin, a select group of courageous adopters took a gamble on a new asset class that could potentially yield tremendous returns, but was also fraught with considerable uncertainty. By the year 2010, Bitcoin was very little recognized and was selling for a fraction of a cent. If they had the insight or luck to invest, they could have amassed thousands of Bitcoins with a relatively small amount of investing cash. If someone had invested $1,000 in Bitcoin in 2011, when the price of the cryptocurrency was hovering around $1, they would have been able to accumulate assets worth millions of dollars by the time Bitcoin hit its all-time high in late 2021. During that period, the price of Bitcoin reached its highest point, which was close to $69,000. This price gain resulted in an explosion of riches for early investors and contributed to the acceptance of the phrase crypto millionaire in popular conversations. Bitcoin's success catalyzed the creation of thousands of additional blockchain-based projects and digital currencies, including Ethereum, Cardano, and Binance Coin, amongst others. Another factor that led to the growing number of crypto billionaires was the aforementioned factors. The introduction of programmable smart contracts, which let developers build decentralized apps dApps on Ethereum's blockchain, was a significant step forward for the cryptocurrency Ethereum. As the use of these platforms became more widespread, new mechanisms for the generation of wealth evolved. One of these mechanisms is the development of decentralized finance DeFi applications, which enable users to trade, lend, and borrow without the need for middlemen. In 2021, Ethereum's spectacular climb from less than $10 in 2016 to more than $4,800 in 2021 spawned a new wave of cryptocurrency millionaires, many of whom had invested in or constructed decentralized finance platforms. A further layer was added to this narrative of wealth creation by the boom of the NFT, one-of-a-kind and verifiable ownership of digital assets, ranging from digital art to virtual real estate, was made possible by non-fungible tokens, also known as NFTs. In the year 2021, high-profile NFT sales captured the attention of people all over the world, and digital art collections such as CryptoPunks and Bored Ape Yacht Club were selling for millions of dollars. A fresh wave of wealth creation occurred as a result of this, as individuals who were interested in NFTs, artists, and collectors saw the value of their digital assets surge. On the other hand, the excitement surrounding cryptocurrencies and digital assets frequently obscured the inherent dangers that come with investing in a market that is still relatively young and not extensively regulated. The decline started in the latter half of 2021 and picked up speed in 2022 when tightening economic conditions around the world led to increasing market scrutiny. Because investors grew less willing to take risks in response to rising interest rates and inflation, the value of many Bitcoin assets started to decrease. In addition, several prominent projects and exchanges either closed their doors or were on the verge of going bankrupt, which resulted in enormous losses. The unexpected collapse of the cryptocurrency exchange FTX in November 2022 caused shockwaves to go through the market. This event is particularly noteworthy. The cryptocurrency community had placed a great amount of trust in FTX, which had a value of $32 billion at one point. But the company went bankrupt almost overnight owing to charges of mismanagement, fraud, and the misuse of user assets. The reputations of individuals involved, including the previous CEO Sam Bankman-Fried, were irreversibly damaged, and thousands of investors lost millions of dollars as a result. As a result of the crash that occurred in 2022, regulatory monitoring became even more intense, and numerous governments all around the world implemented more stringent laws. The Securities and Exchange Commission (SEC) in the United States has persistently increased the level of monitoring it exercises over digital assets. This is being done to lower the possible dangers that retail investors face. The Bitcoin business was confronted with an unclear future as a result of rising legal and regulatory challenges, and the simplicity with which money could be created that was so prevalent in earlier years became less attainable. In addition, the meltdown shined light on problems that exist within decentralized finance. Numerous decentralized finance projects were plagued by liquidity difficulties, which resulted in a surge of liquidations and a precipitous decline in asset values. As a result of the inability of certain platforms to fulfill the withdrawal requests of investors, many investors lost faith in the reliability of digital currency. This crisis caused many people who had previously been crypto billionaires to lose their wealth, thereby exposing the vulnerabilities of decentralized finance systems, particularly when the market is experiencing a slump. Although the cryptocurrency industry has shown indications of recovery as of the year 2023, it is still a significant distance below its high. Bitcoin and Ethereum have reached a stable state, but the overall ecosystem has seen major transformations. Those who have survived the wave of cryptocurrency millionaires are becoming more cautious as they become more aware of the inherent volatility and susceptibility of the asset class. It is less probable that the crypto billionaires of today are early adopters or hobbyist miners who struck gold by keeping assets for an extended period. Instead, these crypto millionaires are typically seasoned investors who have diverse portfolios and a strong awareness of the dangers involved. Furthermore, people are becoming more and more aware that the regulations, the stability of the infrastructure, and the maturity of the market will all play significant roles in the maintenance of their wealth over time. The rise and fall of cryptocurrency exemplify the difficulties and opportunities that come with a class of assets that is both transformational and unstable. The advent of cryptocurrencies has been both a blessing and a curse for a great number of people who have experienced financial independence only to lose it. For those who are still navigating the market, the lessons that have been learned over the previous decade highlight the significance of exercising prudence, diversifying one's holdings, and having a profound awareness of both the opportunities and the risks associated with digital wealth. Even if the future of cryptocurrencies is still unknown, it is abundantly evident that the dramatic rise and fall of cryptocurrency billionaires will continue to have a significant impact on the sector for many years going forward. The path that Bitcoin billionaires have taken serves as a potent reminder of the rewards and hazards that are associated with nascent industries. It was a route that was paved with invention, hope, and transformative technology for those who were successful in achieving wealth. But it was also riddled with volatility, challenges to regulation, and market instability. Investors in the modern day are approaching digital assets with a greater degree of care and understanding as the cryptocurrency market continues to grow. Even though new asset classes can present opportunities that have never been seen before, long-term success is contingent on being cautious, resilient, and adaptable. This is a fundamental truth that is revealed by the quick ascents and catastrophic dips of cryptocurrency investment. The story of crypto billionaires brings to light not only the thrill of the possibility of acquiring wealth, but also the necessity of effectively managing risk in a financial frontier that is constantly shifting and frequently unpredictable. Don't forget to like, share, subscribe, and drop a comment below to let us know what you think.